Let me ask you something uncomfortable. If artificial intelligence can analyze millions of data points in seconds, and institutions are quietly positioning billions into crypto, then what happens to the average investor? What happens to you? Because here's the reality. The financial system in 2026 is not the same system we grew up with. Bitcoin is no longer just a risky internet coin. AI is no longer just a buzzword. And investing is no longer just picking stocks and hoping. So the real question is, are you investing in the future, or are you investing like it's still 2015? Today, we're going deep. Not hype, not clickbait, but clarity. By the end of this video, you'll understand where AI fits into your portfolio, whether Bitcoin still makes sense, what beginners are doing wrong, and how to position yourself intelligently for 2026. Stay with me, because what I'm about to show you might change how you see money forever. Part 1. The system is changing. Let's zoom out. The US debt is massive. Interest rates have reshaped borrowing. Inflation changed consumer behavior. Now layer AI on top of that. AI is analyzing earnings calls, scanning news, monitoring sentiment, detecting patterns and price movement faster than any human trader ever could. So ask yourself, if hedge funds use AI, if institutions use AI, why wouldn't retail investors use AI tools intelligently? But here's the danger. Most beginners think AI equals guaranteed profit. That's wrong. AI doesn't eliminate risk, it amplifies strategy, good or bad. If your foundation is weak, AI makes it worse. Which brings us to Bitcoin. Part 2. Bitcoin in 2026. Bubble or backbone? Let's think logically. Bitcoin survived crashes, survived bans, survived exchange collapses. Now, institutions are entering through ETFs. That changes the psychology. When Bitcoin becomes accessible in retirement accounts, when pension funds allocate 1 to 2%, it stops being internet money. It becomes a macro asset. But here's the uncomfortable truth. Most people don't lose money in crypto because crypto is bad. They lose money because they don't understand volatility. Let me ask you, if Bitcoin drops 30% tomorrow, do you panic or do you see opportunity? That answer tells me whether you're investing or gambling. Smart strategy in 2026 isn't all in crypto, it's controlled exposure, which leads to portfolio structure. Part 3. The Smart 2026 Portfolio Framework. Imagine 3 layers. Layer 1, stability. Index funds, cash reserves, bonds, dividend stocks. Layer 2, growth. AI-driven companies, tech innovation, ETFs. Layer 3, asymmetric upside. Bitcoin, select crypto, high-growth sectors. The mistake beginners make, they start at layer 3. They want explosive gains without foundation, but wealthy investors build from the bottom up. Here's a question. If markets freeze tomorrow, could you survive 6 months without touching your investments? If not, you're investing too aggressively. AI tools can help optimize entries, but they can't fix poor allocation. Part 4. AI tools, how to actually use them. Let's remove the hype. AI tools do 3 things: data analysis, pattern recognition, and risk modeling. But they do not predict the future with certainty. So how should beginners use AI? Use it for screening stocks, sentiment tracking, backtesting strategies, risk exposure calculation, not for blind auto trading. Here's a powerful strategy. Use AI to narrow 1,000 stocks to 20, then apply human judgment to pick 3 to 5. That's synergy, not dependency. Ask yourself, are you outsourcing thinking or enhancing thinking? Big difference. Part 5. The Psychology War. Markets are emotional. AI has no fear. Institutions have discipline. Retail investors have emotion. That's the gap. In 2026, volatility will increase, not decrease. Why? Because AI-driven trading increases speed. That means faster rallies, faster crashes. If you react emotionally, you lose. So the real edge is not technology, it's behavior. Here's your challenge. Next time the market drops 5% in a day, do nothing. Just observe. Because sometimes the smartest trade is patience. Part 6. The Future of Money. Let's zoom out again. AI optimizing portfolios, Bitcoin entering institutions, retail investors becoming more informed. We are entering a hybrid financial era. Not traditional, not purely digital, but integrated. The winners won't be the loudest voices. They'll be the disciplined thinkers. Final section, your action plan. Here's what you do starting today. Build emergency savings first. Allocate 60 to 70% stable assets. Add controlled exposure to growth in crypto. Use AI tools for research, not emotion. Invest consistently. And most importantly, think long-term. If this video made you question your strategy, good. That means you're thinking. And if you want weekly breakdowns on Bitcoin strategy, AI investing tools, smart portfolio frameworks, real financial clarity, then subscribe, because the future of money isn't waiting, and neither should you.